So I want to do an update on the market and how stuff is really, I guess how you can kind of look at it in a real life aspect. So just with stocks, they look trash. It's the S&P 500. So remember that this is comprised of the largest 500, the best 500, 505 companies in America. And they're on a terrible, terrible, well, I say they're about to begin a terrible pullback. So looking at this year, I got a price target at 364.82, just based off of what I see on the yearly chart. Stocks go down. That typically stocks go down often. I mean, it happens. When stocks go down like this, what I'm seeing here, what I'm projecting, something is wrong. You look at, we got rates rising and bank stocks look like this, and I mean, it looks just like the S&P 500. They probably come back up here in this $30, $31 range. In the more medium term, not gonna happen tomorrow. But how do you have rates rising and banks just still trash? It tells you that people are scared. You look at the 30-year yield, 10-year yield, they just skyrocketing like crazy. So the cool thing about stocks is you see how this is basically inverted for right now because of what's going on right now. It's not always like this, but basically, when you have a move like this in yields and you know where they headed, you kind of know what's about to happen in real life. This is telling me that the price of basically the cost of borrow money is about to, well, it is insanely expensive. What do people borrow money for? Cars, houses, um, college. I mean, anything that you borrow money for, you got to think about stuff like this. So mortgages, like I've been saying, don't get crazy. I've been saying it up since here when the breakout first happened. I mean, we all knew that it was going to get high, but nobody was really talking about how it was about to get crazy. And you know this stuff just based off what you see in these charts. We go to something like commodities, looking at crude oil. Crude oil is basically your gasoline. So we already knew this was going higher based off of what we saw in the charts. Right now, you're in a situation where I thought we had a chance to pull back, and it's basically just a small triangle right here. It's just been sitting here since March. They're trying to do everything they can to get um, prices to come down, but if they don't, so so if I see something like this, then I tell myself that I'm telling myself that crude oil is on the move. So I know what's about to happen with gas prices, at least in the super short term. And then over the longer term, like on a monthly time frame, we start to maybe look at where they're going in the longer term. This is going to be pretty tricky because you got a lot of selling right up in here. You made your highs. So I don't know if we go retesting and break out or what, but it's just kind of cool to have like we already knew gas prices about to go crazy up in here. So, well, I mean, I've been talking about it since back here, but um, this is the cool thing about being able to chart and kind of see this stuff. I mean, you even got stuff like silver. I thought this was going to break out like crazy, but it didn't. It reversed, and we already knew that was going to happen. So people think stuff like, oh, inflation is high. Let me run to precious metals. And yeah, that's a valid thought, but it's not happening. It's just not happening. This is not what you expect to see in a breakout. So my point is here, you go into a place where people say that the market is not indicative of the economy, but you see how it all kind of correlates. Stocks going down, yields skyrocketing. Remember, yields telling you that it's going to cost more to borrow money. So if it's cost more to borrow money, you got to think about what's going to happen to people. People are going to be penny pinching. You look at gas prices, you see gas prices going high. You see the cost of food and stuff is going high. I mean, you can chart wheat and all that kind of stuff. So you see all this stuff happening, and then you get to relate it back to real life. So you get to make decisions for your future self. The better you get to make better decisions for your future self. So it's kind of just like it's a cheat code basically. And I think stuff could get pretty rough over the next 24-month period can be pretty rough because this is going to take time to play out. This is going to take time to play out, and until it does something or give some type of signal to say that hey, stuff is okay, then it's probably not okay. And for what reason it's not okay? It could be oil, it could be rates, it could be anything. I don't know what it's gonna be, but I see these charts and I get to relate stuff back to each other. And that's kind of my prediction for stuff going forward. And my whole purpose of this video was to just say if this stuff is happening and these companies are under pressure, these companies not making as much money as they used to, how do you expect to go out into the real world and one, get a job, and then two, keep a job? So just imagine it's 2008 and we have not lived through any recession. This COVID wasn't a recession. It technically was, but look how fast it happened. You talk about something like 2000, it could say 2008, but 2007, 2008, 2009 time frame. People didn't have jobs. They was laid off. They wasn't working. Like, how do you make money? There's only that I know of. There's only one way to make money, and that's trading. So that was my whole purpose of this video, just to talk about all of that stuff. And I'm not saying we going to this, but we looking like we might be going to that. So it's scary to think about all the reasoning, all the signs is there. Of course, something can change between now and then, but until it does, it ain't looking too good. And you just got to make the right decisions for yourself and learn how to take control over your income and just be okay in any kind of economy and not be dependent on anybody or anything, because we are all, I guess is the word, indispensable or disposable to any company, anybody. And if you're not prepared for it, you are basically setting the next generation up for failure. You're setting your future self up to be miserable. And I don't want anybody to go through that. That's why I advocate for people learning how to trade, because again, you trade, you make money whether stocks go up or down. I made the vast majority of my money this week on stocks going down by trading put options. So that's really what the purpose of this video is for. And just to summarize everything, stocks crashing, yields skyrocketing, crude oil skyrocketing, wheat skyrocketing. It's hard to fix that overnight. It's going to take a very, very long time. And with that stuff happening, you are setting yourself up basically for a recession. The prices of everything has gotten out of control. Home affordability, mortgage affordability has priced out a lot of buyers because young people don't have that kind of money. Companies get in trouble. The first thing they do is start laying off people because they still have to make products, because those products make money. They can downsize and still make the same amount of products. That's why the saying is, when inflation is high, the first thing that goes out the window is quality. What does that mean? The company's still pushing out 100,000 units, but instead of having, say 5,000 people working to produce those 100,000 units, now they only got 2,000 working to produce some 100,000 units. They still gonna get them 100,000 units out, but somebody not gonna be part of that process. Whatever that end process is or that end service is for that company, they have to save money. The only way they save money is by cutting expenses. What's a company's biggest expense? People. So clearly they can't run a company with 0 people. Well, and if it go to 0 people, then the company just ain't there at all. And then everybody get laid off and ain't no units, ain't no people, ain't no nothing. So that's basically the two options of where I feel like stuff is headed right now based off of what I see. Because like I said, Rent is out of control. Home affordability is out of control. People just can't keep up with it. So there's only wages not keeping up. Wages not keeping up. So it's only one thing. You got two options here. You stay with, I said my purpose again is to advocate for people taking control of their income, because you don't want to be in a situation like I just described where you're part of a company where they laying people off or they completely shutting down because they can't make no money. These companies not making money like they used to, and we know this because of what we see in the stock market. This is 2007 through 2009 timeframe. Once again, great financial crisis. You see companies, when companies ain't making money, stocks start going down. That, let's put it simply. Try to make it as simple as possible. Companies ain't making money, stocks start going down, because you ain't making money. Who wants to own a stock? You feel what I'm saying? So that's kind of the mindset in a nutshell behind it. And those companies ain't making money, stocks going down. They gotta, like I said, they gotta find a way to save money. It's cutting some of their biggest expenses, which is people, or they going to super cheap products, and that's just bad business. But that's what companies do. You lose customers, and eventually you go out of business anyway, and then eventually you get laid off. So I just don't quite see no way around it unless the Fed pivots hard. But they do that, the inflation just gonna get even more out of control, like way out of control. So it's really a lose-lose situation going forward. So I think this will be one of them videos that probably ages well, because the Fed don't really have a choice. Inflation is far out of control, and you just gotta do something to take control of where you get your income from. And I say the first place we might start to see some relief is down here, this price range, but this ain't gonna happen until it's gonna take a few months for that to bleed down there, because we can flush, chop, flush. I mean, we can just chop slowly, bleed down there. So I say early 2023, late 2023, maybe 2024 time frame. I'll be able to do an update a couple months from now to give a more accurate time frame of when I expect stuff to hit the fan. Unless the Fed comes up with some way to save everything, which I don't see happening, because what can they do? They go back to easy money policies. They just gonna make inflation worse. That's not good. So that was the purpose of all of this. So I hope you guys learned something and took heed to warning. I hope it doesn't go bad for people, but the harsh realities of life is the harsh realities of life. That's where we at with stuff. So this is information. This is what I got. This is what I see. And if something change, I'll let you know. But until then, that's what we're working with. Again, take some control over your life, your income stability, all that kind of stuff, and set your future self up to win. So I'll catch y'all for the next video. Follow the Instagram at 6fatdaddy9. Doing monthly mentorships still. The link is in the bio on Instagram. Sign up for that, and I'll keep you updated on all this kind of stuff. So I'll catch y'all next time.